Sorry, I will now see that I'm muted. A very good afternoon. I am hoping that everyone is well and doing well. If you can just indicate quickly for me if you are able to hear me. Can anyone quickly indicate if they are able to hear me?
Yes, I can hear you
All
loud
right,
and clear.
all right, lovely. Please quickly complete the attendance register for today. We having a lot of questions that we will work through today. I would love therefore that we try and get to the start as possible as we can. All right, we'll just start quickly now at 5 past 5. We'll start with a very quick activity and then we will move on to do some questions. So just quickly prepare yourself. I might ask you if you do not have background noise behind, but you will see. I want to share my screen. So we'll do a quick activity. I'm just waiting. Let's give more people maybe 2 minutes, and then I'm gonna project the question that I just want us to focus on. I'll just put it on the screen, and we will do the question on the screen as I would have shared it. Please complete the attendance register in the meantime. All right, we have to work a bit today uh, for being in the class. So this is just a quick revision. I would love you to share answers, whether you are going to switch off and on your mic. That will be up to you on your side. Especially those who might have some background issues. I will try to keep looking if you have put an answer on the chat. But let's quickly start. You have to select a number 1, 2, 3, or 4. that represents the correct answer to the question. You have to provide the correct answer to the four options provided. So I will try to enlarge this so that on your side you are able to see what I'm putting on the screen. Let me see if we can be able to project any better. Right. Let's see if I can do 180. Okay, let's see if 180 will work for all questions. So this is just a quick activity just to see your understanding so far, and for us just to talk through it. So question 1 is asking what is income less deductions and allowances plus taxable capital gain called? Is it gross income, tax liability, normal tax, or taxable income? So if you can just, when you know the answer, just unmute yourself and provide the answer. What is the answer?
Option 2.
First person says option 2. What's another person saying?
Option 4.
Another person says it's option 4. What's the last person saying?
Option 4.
So the correct answer is definitely option 4. So taxable income is the answer. It is the income less deductions and allowances plus taxable capital gain gives you taxable income. So you get only tax liability once the taxable income is taxed. The 2020 year of assessment of a taxpayer who's an individual is the period from it's the period from
I think number 3.
what's another person saying?
Number 3.
A 2020 year of assessment.
Option 2.
So the answer is 1st March 2019 to 29 February 2020. Remember, when we're saying a year of assessment, we're saying 2021, it means it's ending in 2021. So when we're saying 2020 assessment, it means it starts of an individual, starts from the 1st of March to the 29th of February. Right, let's quickly look at the next one. The binding general rule issued by the Commissioner of SARS 4 options is not binding on taxpayers, is the same as the interpretation note, sets a legal precedence, is issued in respect of the application or interpretation of tax law on a matter of general interest or importance. Which option?
Option 2.
Is the same as the interpretation note. What's another person saying?
Yeah, option 2.
All right. A binding general rule. Yes. What was the answer?
I said option 2 as well.
All right. I felt like someone else wanted to say something. It is definitely not option 2. A binding general rule is not the same as an interpretation note, but it is issued. It is number 4. It is issued in respect of the application or interpretation of a tax law on a matter of general interest or importance. So this would be where you are also given how many years you must write off an asset. So it's an application or interpretation of a tax law, e.g., on binding general rule number 7, we have there the right of periods of assets. Question 4, tax is collected to regulate the spending of consumers, to provide services required by the citizens of the country, to provide the Commissioner of SARS with duties, to help with the running of parliament and municipalities. Which is the correct one?
Number 2.
Number 2 is the correct one. Question 5. Value added tax is a tax on income, a proportional tax, and an indirect tax. A tax on wealth, a regressive and a direct tax. A tax on consumption and a direct tax, or a tax on consumption and indirect tax.
Option 4.
Number 4.
Number 1.
It is number 4. Remember, it is not a proportional tax. It's not a tax on income. It's a tax on consumption. And it's an indirect tax. Question 6, when interpreting the word income in the Income Tax Act, what should be considered? A contra fiscum rule is applied first and thereafter the literal meaning. The intention of the legislator is the only applied principle. Purposive interpretation. The literal meaning of the words is first used. Note is taken of the real intention of the legislature. And lastly, the contra fiscum rule is applied. 4, the act should not be interpreted. It is a set of rules not open for discussion. Which one should be considered when interpreting the wording in the Income Tax Act?
Option 3.
Option 3 is the correct one. Right, let's move on. Question 7. The tax court creates a legal precedent, was previously called the appellate division, only deals with matters that are constitutional in nature, is not bound by its own rulings. Which one is more applicable? Anyone? Anyone who wants to guess number 7? I
Option 4.
must keep checking if you are there. So a tax court cannot create a legal precedent. The court that was called the Appellate Division was the Supreme Court of Appeal. A court that deals with constitutional matters is the Constitutional Court. So the option that is applicable is number 4. The tax court is not bound by its own rulings. So if it rules whatever it rules today, you cannot come back tomorrow and say, but this is what you said yesterday. It is not bound by its own rulings. Right, let us look at question 8. It looks like it's quite a bit of a lengthy question, but I just want you to get the essence of the question. Smarty Pants is a resident of the Republic of South Africa and earned the following during the 2020 year of assessment. Income from services rendered in Brazil and income from services rendered in South Africa, both 200,000. On which amounts will Smarty Pants be taxed? Smarty Pants will be taxed on all income earned in South Africa due to being taxed on the resident basis, or will be taxed on all income earned in South Africa due to being taxed on the source basis, will only be taxed on the income earned in Brazil due to being taxed on the residence basis, will be taxed on all income earned due to being taxed on the residence basis. Which one is more applicable?
Option 2.
Option 4.
Option 4.
It cannot be option 2. Remember, you are taxed on
Option 4.
on all, correct. It's option 4. You are taxed on all income earned due to being taxed on the residence basis. So you bring all your income from all over, whether it's Bitcoin purchased from Canada, America. Once you dispose of that Bitcoin and you must calculate a capital gain, then the whole thing must be included in the tax in South Africa. Question 9. When SARS issues the taxpayer with an estimated assessment, when SARS issued the taxpayer with an estimated assessment, the taxpayer has days to request SARS to issue a reduced assessment or additional assessment by submitting a complete and correct return. How many days?
Number 1.
Number 1. 30 days.
Obvious. Always 30. Is it calendar days or is it business days?
Business days.
It's always business days. Question 10. Which of the following is the correct process to follow when a taxpayer appeals against the disallowance of an objection? The taxpayer must deliver a notice of objection, the NOO form. The taxpayer must complete an ADR, Alternative Resolution 1 form. The taxpayer must complete a notice of appeal, the NOA form, or an Alternative Dispute Resolution 2 form. The taxpayer can go straight to the tax court. Which one is correct?
Number 1.
Number 1.
Let's read the question
Number 3.
again. Remember, you are appealing against the disallowance of an objection. You had already objected.
Oh.
So you can only deliver an appeal. You must complete a notice of appeal, which is your number 3. This is a very good revision. Right, question 11. When would an administrative non-compliance penalty be applicable? Administrative non-compliance penalty when there is a shortfall on tax, when the taxpayer fails to keep proper records, when the taxpayer uses the incorrect password on e-filing, when an incorrect statement is made on a return.
Option 3.
Option 3 cannot be correct. You cannot get a penalty because you forgot or you are using an incorrect password. Otherwise, if you're having an incorrect password on e-filing, you cannot enter. You will be barred from the site to log in. So it cannot be option 3.
I think
2.
number 1.
Remember, if there's a shortfall on tax, all you do is to pay the tax. So it still cannot be number 1.
Option 2.
It is option 2. Remember when we say the onus is on the taxpayer to prove to SARS, the only way that you can do that it is to provide proper records. If you claim or you do anything on SARS and the records are requested and you cannot provide them, then you get an administrative non-compliance penalty, not being able to provide the records in the required period. Question 12, choose the option that is not true. You choose what is not true. So number 1 says the onus is on the taxpayer to show that the amount is not taxable. The onus is on SARS to prove by means of an estimated assessment that there is a taxable amount. When determining if the onus has been discharged, the courts assess the balance of probability. There is no burden on the taxpayer. Which one is not true?
Number 4.
It is number 4. There's the burden of proof is always on the taxpayer to prove. So that statement is not true. Question 3, UIF is a type of tax, is a fund that regulates estate duty, an abbreviation for unintended illegal fraud, or a type of a court.
Option 1.
Number 1.
Option 1, didn't they just make this more obvious? They should have just said another more options. Question 14, trusts do not pay tax. They are not a separate legal entity. Trusts pay tax at a flat rate of 45%. Trusts do not pay provisional taxes. And trusts offer a reliable method to ensure tax evasion.
Option 2.
Number 2.
Option 2.
It's option 2. This is the only thing that you must never forget about trust. They are a type of taxpayer and they also have a flat rate of 15%. Right. Question 15. Any person who provides advice to any person regarding any act administered by the commissioner should be a chartered accountant, be registered as a tax practitioner, be careful not to give wrong advice as it could lead them to them being responsible to pay the tax themselves, register as a taxpayer within 30 days. Which one is applicable?
Number 2.
Only a tax practitioner,
Option 2.
100%, because SARS ensures that tax practitioners are competent enough to provide an advice. Question 16. When determining whether a business will be regarded as a micro business, we first calculate the taxable turnover to determine if it will qualify. We first calculate the qualifying turnover, which must exceed 1 million, or calculate qualifying turnover which must not exceed 1 million. We first check whether it's a trust, since all trusts qualify as micro businesses. Which one is applicable?
Option 1.
Option 3.
Cannot be option 1. It is definitely option 3. We calculate the qualifying turnover, and then it must not exceed 1 million in a year of assessment. The following relates to question 18 to 20, not 17, 18 to 20. We are coming to question 17. Mountain Riders is a company that specializes in the production of custom-made mountain bikes. Mountain Riders is a micro business and qualifies for all the advantages of turnover tax. The company has a year end of 29 February 2020. When would be the first interim payment of Mountain Riders be due? 31 August 2020, 31 August 2019, 29 February 2020. A micro business does not make interim payments on taxes. Which one is correct? When
Option
would
1.
the yes, I'm listening. Number 1.
Option
Sorry, can you give me the option again?
Option 1, sir.
Option 1 is wrong.
No,
Another
option
option.
2.
Why
Option
are you saying
2.
option 2? Why option 2?
Because the year will start on 1 March 2019, and then 6 months will be calculated up to 31st August 2019. That's why I'm saying option 2.
So a
will
micro
be-
business pays 2 interim payments in the first 6 months and then in the last 6 months again. So question 18, we must do calculations here. The estimated taxable turnover was 820,000 on 29 February 2020. The first interim payment was calculated as 1,200. How much would Mountain Riders pay for its second interim payment? Calculation time. I'm listening.
Option 1.
One person says option 1. What is another person saying? All right, let's do the calculation.
Sorry, sir, I think it's option 2.
Let's do the calculation. No, it's fine. Let me wait for other people to first tell me what it is. Is there no one else who's getting it? Right. It is option 2. It is question 2. Lizzie, we are doing a quick activity as projected on the screen. Is there anyone who wants to know how this was calculated?
Yes,
Yes.
please.
Please.
What are you guys getting on your side? Before we do the yes, please, what are we getting on your side? There's only 4 options there. So you must be getting something on your side. What are you getting on your side? Someone quickly read for me. So any person can read for me what is the tax bracket. So we have 820,000 as a taxable turnover. What is the tax bracket that is applicable for this calculation? If you're not sure, we should get it here. There was a question which had no, we did not have here. We did not have here the tax tables. Anyone who can tell me the 820,000 on the line of the tax rates of a small business corporation, which one is applicable when you're looking there?
$550,000.
No, 820 is above that. So the one that would be applicable is which one? Is the last one, isn't it?
Yes, it's the 550,000.
On micro businesses.
On micro businesses, it's 750,000.
That's the last amount. The 820 is more than that, which means that that is what is more applicable, isn't it?
Yes.
So we say how does that line item read? How does that item that has got 750 read?
It says 6,650 plus 3%
That's 3%. Yes.
of an amount by which a taxable turnover exceeds 750,000.
So it becomes 820,000 minus 750. And what does this give you?
Option 1.
Let's quickly take the calculator. So it's 820,000 less 750,000 gives you 70,000 times by 3% is equal to 2,100 plus 6,650 gives you 8,750, right? Can we all see the 8,750? Guess what? They have told you that the first interim payment was 1,200, which therefore means 8,750 minus 1,200 gives you 7,550. Can you see that?
Yes, we can see that. I've got option
Yes.
1.
Sorry?
I'm saying we can see that I've got option 1 when you calculate, and then when you minus, you do get option 2.
100%. So that's how you get the second interim payment. You have to deduct the first interim payment.
Okay.
Yes. So question 19. The actual taxable turnover was calculated as 900,000. Assume the first interim payment was 1,200 and the second interim payment was 2,000. What is the final tax liability of Mountain Riders for the 2020 year of assessment? There are the 4 options. So you guys tell me what is the tax liability? Which one is correct? Which one is correct? Anyone quickly, the answer please.
Option 2.
Option 2 is the correct one. Right, question 20. Which one of the following statement is false regarding a small business corporation? They qualify for 100% allowance in respect of manufacturing plant and equipment. The gross income of the entity must be less than 20 million. The shareholders of the entity cannot hold shares or an interest in any other company unless it is permitted shareholdings. A small business corporation does not pay dividends tax. Which one is false? So the first one is correct. The second one is correct. Third one is correct. So the fact that it does not pay dividend tax is what is false. So it's the fourth one. So the following relates to question 22 to 23. Klein Gebak Close Corporation is a bakery that specializes in pastries. It is regarded as a small business corporation. Kleinpak financial year end is the financial year ends on 31 March 2020. So question 21, Mr. Haman, the owner heard about the different advantages when a company is regarded as a small business corporation. Which of the following statement is true? An SBC only pays tax on a taxable turnover, do not need to be registered for income tax. They qualify for 50, 30, 20% warranty allowance over 3 years in respect of non-manufacturing assets. They do not pay dividends tax. Which one is true?
Option 3.
Option 3 is true. Let's move on. If Klein Park's taxable income for the 2020 year of assessment was 13,229,000, what is its normal tax for the 2020 year of assessment? Which option would you choose? Which option?
3.
It's option 3. Please note the formula as well. Question 23. Which of the following will not be regarded as investment income? Dividends, annuities, interest, salaries. Which one is not an investment income? It's obvious.
4.
4, it's salaries. Right. Question 24 to 30. We've got a company is a dog parlor and a small business corporation with the year end of 31 March 2020. The 2019 year of assessment was assessed on 20 October 2019, and the taxable income amounted to 380,000. The taxable income for the 2018 year of assessment was assessed on 3 January 2019. And the taxable income amounted to 340,000. On 31 March 2020, the taxable income was estimated to 480,000. On 1 June, it was assessed and actual income amounted to 500,000. If we were to calculate the first provisional tax payment for 2020 year of assessment, when would be the due date of the first provisional tax payment? If the year end is 31 March 2020.
Option 3.
It's option 3. Nope, it cannot be option 3. Is it option 3? Yes.
Yes.
It is option 3. What did I do now? Right. All right. I'm going to let go of question 25. 25. I want to let go 25 because it will require us to read comprehensively on the added information. Let's look at question 26. Assume that the basic amount is 360,000. How much is the first provisional tax payment? Remember, this is a small business corporation. So which one would be applicable? 1, 2, 3, 4.
Number 2.
Small business corporation.
Oh,
Remember, it has its own tax rates. It's going to be number 4, ne? It's that tax rate of a small business corporation, then it's divided by 2 because you're counting the first provisional tax payment. Question 27, if the year end of assessment is 31 March 2020, when is the second provisional tax payment for the 2020 year of assessment due?
Option 3.
It is option 3. All right, let us look at question 29. Assume the normal tax was calculated as 30,000 and the first provisional tax payment was calculated as 5,000. What is the second provisional tax payment? And this is the last one that we are doing on this activity. Question 29, which answer is correct?
I'm not sure, but I'm just guessing.
Oh, come on, guess.
Number 4.
Number 4 cannot be correct.
Number 3.
Why number 3? Why number 3? Right. Remember, if the normal tax is 30,000 that you have to pay at year end, and the first provisional tax payment that was calculated and paid was 5,000, then you have to say what is due by SARS is 30,000 minus what I had already paid, and then the remaining would therefore be 25,000. Very tricky, but I will try to share this question with you so that at least you have it on your side. Therefore, we are now moving on. I'm hoping that everyone was able to complete the attendance. Those who were not able to complete it, let me see. There, I've shared it, the attendance thing again. So we are now moving on. And in the interest of time, I want to select only one question for learning unit 3, and then we can have another question for learning unit 4. Sorry, I just am looking which one is a better question to do. I think let us do 3.5. So I'll just try to upload 3.5 for you, so that we can be able to do 3.5. I'm just uploading 3.5 quickly. It's a question based on micro businesses. The question is currently uploading. It has uploaded. So you have 8 minutes to go through the question. So I may also project the question here for you if you may need the question. I'm giving you 8 minutes to quickly do the question, and then we will start together at 6 o'clock. The question, you have to calculate Peter's tax liability for the 2021 year of assessment in accordance with the turnover tax system. And yeah. So we'll do this question just now. Let me leave the question here. If you are able to download it, please download it as well. And we'll speak now at 6. Right, please download the question and start doing the question on your side. Thank you.
I'm tipsy. Did you come in? Hello. Hello. I'm tipsy. Daddy, help. Daddy. Daddy, help. Help me. Don't go back to me. Hey. Daddy, help. Mom, they're biting me. Maybe bite you until you come back here. I think that's our seats in the year so huh? Attend.
All right, can anyone indicate if they are done? That we can start. Anyone, you can type. Done, we can attempt. So we have to calculate the tax liability for the 2020 year of assessment. Make this 130. All right, let's try to use the whole. All right, let's quickly speak. So in order to calculate the tax liability, Peter Disney runs a toy shop as a sole trader. He purchases toys and also manufactures his own toys. Peter is registered as a micro business with effect from 1 March 2018. Peter earned the following income and incurred the following expenses. So income that we have, the first one, we have got the sale of toys, 750, and we have to look at note 1. So we have the sale of toys. What is note 1 saying? Peter usually sells all the toys for cash, but on 28 February 2021, he was owed 2,000 for toys purchased by his friend Millie Cyprus. Millie paid this amount in March 2021, and it is included in the 750,000 sale of toys amount above. So how much is the sale of toys? How much should we include in our books?
748.
Why?
Because he still owes us, so we're not supposed to include it because it's not in our account. It's still owed to Peter.
So 2,000 is excluded because it had not been received at year end, and the year end is 29 February 2020. No, it's 2021, 28 February 2021. So that's why it's 750 minus 2,000, which gives you 745. And the second item is receipts from the sale of manufacturing equipment, which is 200,000. Please remember, in an exam, you have to show calculations in full of how you got to the 748,000. Right, receipts from the sale of manufacturing equipment, note 2, 200,000. Peter purchased this equipment during 2018 for 400,000. The tax value at the date of sale is 250,000. He sold the equipment on 1 April 2020 for 200,000. So how much is included for the receipts from the sale of manufacturing equipment?
200,000.
Another person?
100,000.
It's only 100,000 because all capital receipts, we only include 50% of them. So we only include 50% of capital receipts, which therefore gives you 100,000. Then the next one is interest income, 70,000. Do we include all the amount of 70,000? No one saying anything? No one wishes to say anything? So no, 70,000 is excluded, and it's excluded in terms of paragraph 7 exclusions. It's part of paragraph 7 exclusion. Peter, remember, is a natural person, and interest is therefore not included in the micro business calculation of taxable turnover. So the interest income is not included. Then the next one is refunds of plastic for plastic purchased, and we have to look at note 3. So what does note 3 say? Note 3 says the plastic was not the right quality for the making of toys, and was returned to the supplier during the year of assessment, Peter received a refund of 50,000. Is a refund of 50,000 included here?
It's excluded.
So refunds are excluded. Are excluded. In taxable turnover. Paragraph 7, exclusions. So it's very important that you write these things in order to earn marks. There's a recent shared thing from the lecturers that requires you to share your reasons and write full sentences. Right. The next one is running expenses relating to the toy shop. Can you claim the expenses? This is what is nice about a micro business. This is not taken into consideration on calculation of taxable turnover. So we do not even consider your expenses because you're already getting a huge tax incentives. Purchase of toys and other materials. Remember, these things would be normal deductions, but for your micro businesses, it's things that are not excluded. So similarly with purchase of toys, this is not excluded. So once we arrive here, we can be able to do the totals. It's 848,000, and this is called taxable turnover. This is what this amount is called, taxable turnover. Taxable turnover, that's what this amount is called. An amount that you look at in order to calculate whether a company qualifies to be a micro business is called a qualifying turnover. Quickly calculate for me a tax liability. How much tax liability? How much tax would you pay as a micro business on 848,000? Quick calculation. I just want the last amount. What would be your amount? Yes, I'm listening. For those who possibly want to see the last item, it says when the taxable turnover exceeds when the taxable turnover exceeds 750, then it says then your tax is 650 plus amount exceeding 750 multiplied by 3%. So quickly give me the calculation. There is the last line item that is applicable in a micro business. Quickly give me the amount that you are getting. Remember, this amount is for 2 marks. What is your amount? Anyone who has got the amount? Anyone, please, quickly?
9,590.
Any person who's not getting that? $9,590. That becomes your taxable liability. I hope everyone was able to get that, because this is what we were asked to calculate in this question, the 9,950, and there you have your 2 marks. Any question based on what we did today?
Sir,
Yes.
can you please explain why are we not including the purchases of toys?
All right. This is the problem with the micro business, or let me not rather say the problem. This is an understanding that you need in order to understand the micro businesses. In a normal company, you would be able to claim what we call expenses in terms of the deduction, section 11A, which says during trade, then you can be able to claim expenses or losses which are actually incurred in the production of income during the year of assessment and not capital in nature. In a micro business is a special type of a company. There are regulations that apply to it in terms of any company first needing to meet the definition. For you to meet the definition of a micro business, you must have a qualifying turnover limit of 1 million. And post the qualifying turnover limit, there is a structure on how to calculate a taxable turnover, including a tax liability, that you calculate that from a qualifying turnover. So you have a qualifying turnover, then you have a taxable turnover, and then you have a taxable income. So it's quite a structured, type of a taxpayer. Anything else that you purchase, it's not included in the micro business. So a micro business, it's a qualifying turnover, which you are told that what makes a qualifying turnover, then it's a taxable turnover. It's very straightforward also what makes a taxable turnover. So you can only calculate tax liability on a taxable turnover, and the qualifying turnover is all receipts less capital receipts. That's what a qualifying turnover is. And a taxable turnover is receipts plus 50% of capital gains. Any other expenditure that you are claiming for cannot be claimed under a micro business. It can be claimed in terms of Section 11A on other companies, but not a micro business. So when you're calculating a taxable turnover, there is a rule that applies to it. And it's a rule that I've explained. Hence, running expenses, purchases, you do not claim a deduction on those ones. Understand?
Okay, thank you, sir. Yes.
Thank you.
Thanks.
Anyone else who has a question? Right. If there's no one else who has a question, we're just going to do theory questions in the next 40 minutes. To please hold on. I know that theory can be, in a lack of a better word, can be seen as boring. But I hope this is not going to be boring. So question 4.5, it's about income. Gross income and the applicable requirements, including characteristics of gross income in terms of Section 1 of the Income Tax Act. So we are told that the following case studies all contain an accrual income, an accrual amount, all contain an accrual amount. So you've got Spring CC, Wire CC, Fencing CC, Watch It, and Cotton Ltd. You have to apply the accrual principles to each of the above case studies to determine the date of accrual of the amount in question. Only on the last study case, Cotton Ltd, also indicate the accrual principle and the date of accrual if the delivery of the strip was a condition of the sale. So when we're doing Cotton Ltd, we will revert back to that part. So let me give you quickly 5 minutes for you to quickly read this question. And at 6:30, we attempt the question together. Let me also share the question to you. Let me quickly share the question. Right, the question is shared. So it's question 4.5. So you quickly can download the question, go through the question. So you have 5 minutes. So we'll start together at 6:30. So quickly use your 5 minutes, download the question, open the question, and let's quickly attempt the question. Right, I'm not going to speak much in this one. I'm hoping that you will be able to be speaking on your side. So this question is in terms of a case study or a particular case that was in the South African Tax Court of the Commissioner versus People's Stores, where it was confirmed that the meaning of accrued to is the amount to which he has become entitled. So we're looking for where a person has become entitled. So let's quickly look at these case studies. On Spring CC, Blue Water Ltd declared a final dividend of 12 Rand a share on 14 February 2021, payable to shareholders registered in its share register on 1 March 2021. The final dividend was actually paid on 15 March 2021. Spring CC holds 5,000 shares in Blue Water Ltd. Apply the accrual principles to each of the above case studies to determine the date of accrual of the amount in question. So the question is, Spring CC holds 5,000 shares in Blue Water. When would Spring CC be entitled to a dividend? What are the conditions of being entitled to this dividend? Anyone?
I think it's on the 14th of February because it was declared on that day.
It's declared on the 14th of January, right? But it's not paid on the 14th of February. You are told that the condition of the 12 Rand dividend, it's only payable to shareholders registered in its share register on the 1st of March 2021. So on the 14th of February, if you were to resign, sorry, not resign, if you were to sell your shares on the 15th of February 2021, would you be entitled to the dividend?
I think I would be entitled because it was already declared, even though it was not yet paid.
But can you see the full condition? The condition is shared. The statement does not stop on a share of 14 February payable to shareholders. It does not stop there. It has a condition.
Oh, I can see it was registered on the 1st of March.
Yes, that's the
Okay,
condition.
on the 14th it was declared, but it was not registered. So because of it was not registered, it doesn't mean
It's not
much.
about it's not about registration. No.
Mm.
If you are in
I
my
think
company,
yeah,
and I tell you that today, on the 17th of August, I'm declaring a final dividend of 12 Rand, but it will be payable only to shareholders who will be registered in the share register of the company on the 31st of August 2021.
or then it means if I register, by then I wouldn't be part of, I wouldn't be registered in the company, so I won't be able to get those shares.
No, that's not what it means. A share register means people that have shares in the company. That's what a share register means. It's just a list of people who have shares in the company.
Okay, but I think I still need to check it again. I think
Yes.
I'm not present clear about it.
Sure. And anyone who has applied their thoughts on this question? Anyone who wants to attempt the question? So in this particular question, the condition that makes shareholders to be entitled to a dividend. For example, who is the shareholder in this question? Springs CC is holding 5,000 shares in Blue Water. So Springs is the shareholder. They are only entitled to the 12 Rand final dividend if they are able to hold on to the shares until the 1st of March 2021. That's the condition. That's what will make them entitled to the dividend. The date of accrual is not the 14th of February. It becomes the 1st of March when the shareholders are unconditionally entitled to the final dividend. So even when the dividend is actually paid on the 15th of March, but the unconditional entitlement is the 1st of March. So the unconditional entitlement is not the 14th of February. It's not the 15th of March when paid or when declared. It's when the condition to receive a final dividend payment is to be as a shareholder on the 1st of March. That's what entitles you to a dividend. So the date of accrual is 1 March 2021. Any questions? Okay. All right, I thought someone wanted to ask something. Let's pass. Wire Limited, so it's a private company. On the 1st of January 2021, Wire made a 6.5% fixed deposit investment for 12 months with a local financial institution. The fixed deposit together with interest can only be withdrawn after the 12-month period has lapsed. What is the date of accrual in this question? Remember, the question is asking you about interest and not about the capital. Capital is your own money. So the question is asking you about the 6.5% interest that you are making in an investment of 12 months. What is your date of accrual? Would you be entitled to an interest in 6 months' time if you were to withdraw your investment?
No.
So what does this mean?
You'll be entitled to it after 12 months.
And what would be the date after 12 months?
It will be
January.
2020.
2nd of January 2022.
January 2022.
So the year ends on 31st December 2021. That means from the 1st of January 2022, you will be unconditionally entitled to your interest. Other people can say on the 31st of December, but 31st of December is the last day of the investment. So therefore it becomes the 1st of January 2022. But technically, the date that is looked at is the 31st of December because that is the last day. So it's only on the last day at 23:59. After just 23:59, you become unconditionally entitled to the interest made in the account. So it's the 31st of December 2021, and it will be paid over on the 1st of December. Watch It Pty Ltd carries on the business of a building contractor specializing in the erection of sports pavilions. On 31 January 2021, it completed the building of the pavilion for the Blues Cricket Club. In terms of the building contract, 90% of the contract price is due and payable on completion of the pavilion, and 10% of the contract price is to be retained as retention monies until a final certificate is issued by the engineer 6 months after the completion of the pavilion. The contract price of the Blues Cricket Club contract is 4,500,000. Question? Tell me about the dates of accruals. What happens on the 31st of January?
They completed the building.
So what happens when the building is completed? What is the agreed conditions?
They'll get 90% of.
So that means therefore that 90% of 4,500,000 accrues to Watch It on the 31st of January 2021. And the remaining 10% accrues when?
After 6 months.
After
When
6
the
months.
engineer have completed.
So the key thing is not the period. What is the key thing? The key thing is not the period here.
When they get the certificates.
Yes, that's the key thing. That only when the final engineer certificate is issued will the remaining 10% accrue to Watch It Pty Ltd. Right, let's look at Cotton Ltd. We are told that Cotton sells sporting equipment. On 20 February 2021, it sold a set of night cricket strips, shirts and flannels on credit to a rugby club for 4,500. Cotton Ltd undertook to deliver the strips on 13 March 2021. So you are told that the date of you must indicate the accrual principle and date of accrual if the delivery of the strip was the condition of the sale. So in this case, what would you say? When does Cotton Ltd become entitled to the sale of the night cricket strip? In terms of the accrual principle, when does Cotton become entitled to their money? So if delivery was not the issue, it would be the 20th of February. But now that delivery is the issue, what is the condition? The condition is
that they deliver.
Yes, so it becomes the 13th of March. Is it the 13th of March? Yes. So it becomes the date of delivery. So if the delivery happened on the 13th of March, then the date of accrual will therefore be the delivery period. Right, let's quickly do one last question, very quickly. I will share all these questions. Question 4.6. Property CC owns several buildings which it rents out. Property CC's year end is 28 February 2021. On 1 January 2021, Property CC concluded a lease agreement with Desks. The agreement provided the following clauses. Discuss whether the amounts referred to in each of the above clauses should be included in the gross income of Property CC for the 2021 year of assessment in terms of the definition of gross income and special inclusions. So if Desk would pay Property CC a lease premium of 50,000 on the signing of the lease agreement on 1 January 2021, would the lease premium of 50,000 be considered to be gross income? All right. This is how you would answer this question. A lease premium is capital in nature. It does not meet the definition of gross income. So what is the definition of gross income? It is total amount in cash or otherwise incurred, accrued to in favor of a taxpayer in a year of assessment, and it is not of capital nature. So this amount of 50,000 is capital in nature. It does not meet the gross income definition. However, a lease premium is taxable under the special inclusions, which is provisions of the gross income. So it's one of the few items that is there in your study guide. So you've got lease premium. So lease premium of 50,000 would therefore be included in the gross income. So Desk is obliged to improve the property to the extent of 500,000 by converting part of the warehouse into offices. The actual cost of the improvements was 525,000. The improvements were completed on 30 April 2021. So similarly, would apply the same definition that of gross income, that leasehold improvement would not meet the definition of gross income. Why? It is of capital in nature. As you can see, it's about improvements. It will not be included in gross income in terms of the gross income definition, but it will be included in terms of the special inclusion, which is provisions of the gross income definition. So this amount is required to be included, therefore, in Property CC's gross income. And what amount will be included? Is it the 525, which is the actual leasehold improvements, or is it the 500,000 that has been agreed in terms of the agreement?
500,000.
500,000.
So it's only 500,000 that's get included. What is the date of accrual of this improvement? Is it 30 April 2021, or is it the date when this agreement is signed off of leasehold improvements? The accrual date, is it the date of the agreement, or is it when the improvements are actually completed?
When the improvement were actually 38 April.
Nope. So the 500,000 amount would be stipulated in the lease agreement probably, or would be given a date of the improvement, but so far we only have one date, which is the 1st of January, the date of the agreement. So the 500,000 accrues on the 1st of January 2020. So in Property CC's gross income, the 500,000 is included from the 1st of January when the agreement is signed, because it means that desks cannot be able to use property CC's property without the conversion of the warehouse into offices. Hence, that 500 is included immediately in the books of property CC, as if they are the ones that have done the improvement. Last one, desk would pay a monthly rental of 6,000 per month to property CC. The building was used by desk from 1 January 2021, but the company only started paying the monthly rentals to property CC on 1 May 2021 after the leasehold improvements were completed. When would rent be due? So we look at rent income, rental income in terms of the requirements of the gross income definition. It is the total amount it is received by, accrued to, in favor of property CC. It is in cash or otherwise during the year of assessment, and it is not of capital nature. So all those components are met in terms of the definition of gross income. The lease agreement was signed on 1 January 2021. When would the rentals accrue? Is it from the 1st of May or is it from the 1st of January?
1st of January.
So it's from the 1st of January. This therefore means if the year end of property CC is 28 February, for the current year, how much rental income are we going to include in property CC's gross income?
$12,000.
12,000, which is 6,000 multiplied by 2 months, and that would give you 12,000. That as well takes us to the last question that we are attempting today. There is one question that we didn't do, and the only reason why I didn't cover that question, it was mainly because it's a micro business question. Sorry, it's a small business corporation, which is a question that I believe you can try to practice on your side. It tests the two important principles, the micro business and the small business corporation. So please do complete the feedback or evaluation form as I've shared it just now. For those who joined a bit later, let me just quickly share the attendance as well. If you did not manage to complete the attendance, let's make sure that that one is also shared. Let's also quickly look before I ask if there's any questions. So we are going to be meeting again next week on the 24th of August, where we will be trying to work on income and deductions. So we've worked a bit on income. We might also work a bit on capital allowances as well. So we might work on capital allowances and on deductions as well from next week. We'll try to find more questions that we can be able to do. So we still have 5 sessions that we are going to have together. So in order to prepare you fully for the exam, for everything that we've covered today, can I just get an indication if there is anyone who has got questions?
Sorry, sir.
Yes.
In the previous theory question, discussion question 4.5, I think I just missed fencing limited. I think I missed when Sir was talking about that.
Fencing limited, ne? Maybe I might have also quickly browsed fencing. That is question 4.5, ne?
Yes, sir.
All right, fencing. So fencing manufactures wood fencing. On 1 February 2021, it completed a wood fence to be erected around a cricket club. On 10 March 2021, this fence was sold for 50,000 and delivered to a cricket club, but no amount was received. What would be the date of accrual? When would the 50,000 start accruing? On the 1st? On the 10th? So what would make Fencing Ltd unconditionally entitled to the fence of 50,000 that it has erected? It would be the date of sale. So the date of sale in this case is the 10th of March, which is when the fence was sold. So although no amount has been received, the issue of the amount being received has no significance on the accrual principle. So the accrual is when fencing becomes unconditionally entitled to an amount as per People's Stores court case with the commissioner. Therefore, the amount of 50,000 accrues on the 10th of March 2021. Sorry about that. Thanks for reminding me to cover that as well. Any questions on everything that we've covered?
Sir,
Yes.
the question that you said we will do it on our own, are you going to share it now or you going to
You have
put it
access
on
to
the
do you have access to the Western Cape page?
Yes.
I'm going to immediately share it there.
Okay. So because we are writing on the 1st October. So because I see your session, the end on
Is that
the
final? Is the
I'm not
1st of
sure.
October final?
I'm not sure.
The lecturer wrote to me yesterday informing me that there is no exam date yet. But I'll quickly send an email to the lecturer.
Exam date is on the 1st of October.
Yes.
All right, I have taken note of that. If that is the case, then I will be providing a revision to my schedule once I've confirmed. Once I've confirmed the fact that the 1st of October is indeed the exam date, then I will you will be alerted of the change in terms of the schedule. Thanks for indicating that to me.
Okay, sir.
All right, thank you. Then if there is nothing else, we meet again.
Sorry, sir.
Sure.
Back to that discussion question 4.5. Can sir just tell me the calculation for the accrual amount for Wire Pty Limited?
So for Wire Pty Limited, there was no amount. The only thing that we had was a 6.5 fixed deposit or fixed investment. So the only thing there that you are to speak to is the 6.5 interest. When would you have a right to it? You can only have a right to it after the 12 months of the fixed period has passed. So you can only be entitled, therefore, on the 31st of December and on the 1st of January for payment. So the 31st of December becomes the date of accrual of the interest because it is the last day of the investment. So there's no amount involved there.
Okay, sure, I get it. Thanks, sir.
All right, lovely. All right, I've already shared everything on the page, all the questions that we have done today, and some additional questions that you may also look at in your own time in terms of practicing. Otherwise, it means that I have to bring forth 2 classes forward in order for us to complete everything within the month of September, noting that September has a 24th long holiday. So I don't want to have a class on the last week of September, a few days before your class, before your exams. So we'll try and push everything to possibly we'll see. We'll see. Let me confirm everything and then we'll fix the schedule to have the correct dates. Otherwise, thank you for attending today. Till we meet again next week, Tuesday. Thank you very much.
Thank you, sir. Have a
All
good
right.
evening.
Thank you.
Thank you, sir.
Thanks, sir.
All right.